following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
We will be this segment featuring Anthony Crudele. Develop Your Edge. How you doing, Anthony?
Doing great. Hope everyone's doing well. We're in the midst of rollover, which we'll be focusing on next week's show, but today we're going to be focusing on trading treasuries. And Tom, you know, when it comes to treasuries, I think this is a product that actually would be better suited for many index traders out there, or at least an additional product to add to their trading. And today I'm going to go over some simple ways, I think, for index traders, because we know that most of the traders out there are trading indexes or even currencies. It's a good segue to take a look at trading treasuries. I mean, I think they're a great product.
Yeah, I agree. And you know, I really enjoyed watching you for once. I usually host you, but last week I got to watch you talk about treasuries and with Mike Burke about the correlation. And I think it's just a natural fit. You know, when you're starting to look around, it's, you know, the volume is there, the liquidity is there. Why not take advantage of it?
I think from a scalper's perspective, it's actually a better product for traders that want to be more active within ticks because of the liquidity at every single price, right?
Yep.
I mean, there's obviously a ton of liquidity across the board when you're looking at the equity indexes, but when you look at one single price, you would put 10-year, you know, SOFR futures, bonds, all of those at the top of the list. And those markets, when it comes to scalping, I think are really, really a great product because price matters more in that market than the NASDAQ. I mean, when you look at the NASDAQ, I always look at it as a range of execution. If I want to sell, like this morning, actually, when I get to the charts, I'm going to talk about 19,675. I think it's a pretty good high. Right. If you want to get short there, you've got to have really 20 to 30 points above, 20 to 30 points below to really feel good about that price holding, because that one price does not matter. There's not one price in the NASDAQ that's going to have the amount of liquidity that one price has in a 10-year. And so you're looking at scalping and you're looking at ticks, why not look at treasuries?
Yeah. And I think, you know, there is some idea that the trend of treasuries is in your favor when you're scalping as well, right? Absolutely. How the markets trend in the treasuries.
Yeah. And basically, I think what you're getting at is if the trend is up, you want to scalp with that trend in treasuries. Like, it's not one where you're looking to fade it and the move doesn't happen nearly as fast, although we did see a pretty big move the other day on CPI on it. But the reason why that's such a good point, Tom, and it was something I was going to talk about today, is that most people, when you're looking at scalping, they're going to get caught up in two directions in trading NASDAQ or S&P. Like today, I put out my free morning note. Like, I'm still bullish S&P. I said NASDAQ may stall or even pull back here. I'm not interested in fading it, but nonetheless, I want to buy a dip in S&P. But it's a down day. So what happens is either you're going to try and get short, you know, in an upward trend, a really strong upward trend, right, on a down day, or you're going to buy into a day where the market, you know, is having potentially a pretty weak day. And so you might get stopped out. And so you end up really over trading a lot of the times. If you're a really short-term trader, you're always looking at every level and you're trading from level to level. So therefore, even though it's a bullish trend, you might trade two sides of the market on a daily basis. Most traders can relate to that. When it comes to the 10-year, what's different about it is if a trend is in play and I consider it a move that is underway, then I'm almost only going to trade and scalp with that trend, because I'm not going to try and take a tick against a 10-year move that's like slowly getting to a price level. It gets to the price levels much slower. And so therefore, when you look at the overall trend, you're gonna find more opportunities to trade within that trend. Even if you don't get a perfect price, you could scalp with it because it hasn't reached its objective, and it doesn't reach its objectives nearly as fast as S&P, NASDAQ, or Russell.
Yeah, it's almost like the Treasury's kind of, you mentioned objective. It's not as prone to uh, changes in direction or whipsaws or just these wild volatility swings because there isn't as much news moving that market, right? It's almost like the market participants say, okay, well, what's the news today at 8:30? Maybe it's 9 o'clock, 9:45. Okay, this is where the market should be. We'll get there, but it's not a lot of, okay, let's pull back before we go up, and then let's pull back again before we go. It seems like the trend is a little smoother.
No doubt. And once again, it's because there's so much volume in these at each and every price that it gets absorbed a lot quicker, right?
Yeah.
And so I want to start off today. I want to actually going to talk about equities just because I think it's important. I think it's just a kind of a segue into what we're going to talk about today, moving into treasuries or trading treasuries, and even what's going to happen next week with rollover and that show. When we look at NASDAQ, I've talked about this a lot. You look at my Bollinger Bands, we reached a peak in the E-mini NASDAQ where I think is something to take a look at as a key level, 19,675-ish. I think that this is one of those things that when we get to the Treasury chart, I look at as objective levels, like where's the market looking to go to?
Mm-hmm.
What's the market's objective? Where is it trying to get to? And this is a big area I looked at in NASDAQ, and those are Bollinger Band peaks. And the reason why I look at these on a 20-period 3 standard deviation look is because when the market is making a move up, like you can see here, actually, let me get my pointer here. I want to show you guys. So when you look at, let's see if I can get this right here. Okay. When you look at this right here, when the market made this high, you look at what the Bollinger Band did, it made a peak, right? Mm-hmm. And so you see that separation as the market went sideways, you saw the markets, the Bollinger Bands keep going higher. This showed the potential for a 3 standard deviation move, and the market didn't quite get there. Then the markets consolidated, had a pullback. We talked about that in previous shows, and then it goes up and it gets to this area. Now, why I like these areas is because this is what I look at is unfinished business, but now it's completed. Mm-hmm. So it's a very important area for NASDAQ today, I think going forward as well. And what you notice is that top Bollinger Band is expanding outside of that previous peak. And why that matters is because it's saying that, we might have reached, Delhi's objective price, the area that we thought we could go to, but now volatility is expanding again. So this move has potential to continue to go higher as the Bollinger Band is now taking out that previous peak. It's expanding outside of that last unfinished business target. So it's giving us the opportunity to say, okay, it might be a short-term move where it rotates lower, which we're seeing today, but overall we're still in grind mode. And I think this is a look I wait for and wait to see. Like a day like today, you're going to learn a lot, especially as we get into rollover, kind of what happens. If we start pushing above here and we start expanding outside of that peak, that just tells you that this move even just has more steam than you even anticipated.
So Anthony, that's a great point because you're looking at what's happened in the past and giving you guidance for where we could go. We achieve it, but now you're looking at what's happening right now. Volatility expanding. There's still room to go. My question is, in your experience, and I don't know if you look at the markets this way, I see expanding Bollinger Bands, I think trend. Okay, great. Does that give you a little more confidence? Like how much more confidence does it give you that, okay, today's a consolidation day, maybe a little bit of a down day. We're still up over yesterday. What's the does it give you some more probability that we'll continue this uptrend? Do you think like, okay, it's 60-40 will continue to go up? Do you not think like that? You're just waiting for how it sets up in the morning?
I really have to wait to see how it sets up in the morning. And the reason why I wanted to start off here with this today is because it's to give perspective as we lead it to what's happening in equity markets and how the Treasury market at certain times might be a good market for you to trade. And I think you could trade them on the same type of setups too. I don't want anyone to change their strategy for any specific market. I think that if you find one strategy that you like, I think you just get really good at executing it, and you find the markets that it works really well on. And to me, once you have that one strategy, then you actually, and you've had consistency and you've made money on it, then you could expand out to other markets. And so I don't want to just say to jump ship from one to the next and look which one is, best for that specific day. I think that takes a lot of time, but
Right.
I want to show perspective of, like, when I see this type of scenario, this is where we are right now in markets. Markets are getting extended, right? They're getting to these bigger picture levels. And so you have a market that's basically a runaway bull market that we've had. And I just want to make note that that's something to watch in NASDAQ, but it doesn't mean that the move is over. It means that there still is potential for it to continue to go higher as long as we stay above this 5-day moving average and Bollinger Band goes up until what happens? Maybe the Bollinger Band starts to come in, then we've got mean reversion. I want to move on and show the same scenario looking at S&P has not yet hit its objective, which is important because it means that we have a divergent tape. And that's kind of what I'm getting at, the environment that we're in right now. We have a really strong NASDAQ, as we know. What's in NVIDIA is up, 3% again today. I mean,
Right.
It's crazy, right? Every other day it's up 3%, which I'm happy because I've got it in my portfolio, but
Right.
it takes every will in my body not to want to get out of all of it, but it just keeps going. And so you have NASDAQ continuing to get pushed higher. S&P's feeling the weakness in energy and other sectors that just are struggling. But ultimately, when you look at it, I look at it and say, okay, what environment is this? It's grind higher, has not quite reached its objective like NASDAQ has. So watch for that divergence within the tape. And I also want to go to the Russell. And this is kind of leads back to where we were last week, where we talked about the Russell. I mean, you look at the Russell, the Bollinger Bands are in the middle of a peak that they haven't even expanded outside the peak going back to, April. And so it's just a total two-way tape. So if you're a Russell day trader, I mean, you really have to understand that there's no real edge right now in this tape. Day traders, when you're looking at any market that you're day trading, you want to find that the edges are aligned with the long term and the short term. Almost every technician out there will talk about how the big picture is where you're going to find primary trend. That's Captain Obvious there, but how that leads into what you're going to do intraday. And I don't care how short term of a trader you are. If you're scalping NASDAQ on a regular basis, yeah, you're going to be able to pick up some money selling rallies if you're super patient for rotations, even in a bull market. There's no doubt about it. But it's a very difficult trade, and you're going to be fighting that underlying momentum and volume on a day-to-day, day in, day out basis. It's tougher, right? And so you have to be perfect. And that's why a lot of people, I say, as they get into two-way trading, they get chopped up a lot. And so when you look at the NASDAQ versus the S&P and the Russell, this helps you put things into context. And I don't want to spend any more time on the indexes. I just wanted to kind of give that perspective, because when you get to like the ZN, we're going to get to that order flow chart in a minute. It's the same philosophy. And that's the point I really want to make, is that even though you may have your strategy built for NASDAQ or S&P or Russell or corn or whatever market that you're trading, once you get really good at it and you understand how the bigger picture context plays into the intraday, that will help you become a better short-term scalper, period, the end. The best results I ever had in my career were when the big picture trends lined up with macro events. And even though I was a super short-term scalper, I can go back to 9/11. And 2001 was a great year for me. I can go back to 2007 and 2008, the global financial crisis. I can go back to COVID. When you have big picture trends taking place intraday, I'm almost only trading in those one directions. You wait for market setups and you try to focus in on those directions. And they start with obviously macro backdrop, big picture trend, what's leading the way. And then you get into shorter term charts and you scalp or short-term directional trade in those in that direction. What I think is interesting about treasuries is that you go back to it, they have been really in a consolidation. So it's a two-way tape. And that's why I wanted to start with NASDAQ, S&P, and Russell and get to the point of like understanding the context of the situation. It's a two-way tape. So anytime I have any sort of indicators or any kind of short-term strategy, I'm looking at 10-year and saying two-way tape. So if you're a two-way tape trader and you like being long and short intraday, this is a market where you want to see this type of setup on like a daily Bollinger Band or whatever longer term strategy you have. When you want to trade two ways, you want to be able to believe that no one really has an edge one way or the other. Like right now, I said, NASDAQ, I really don't want to be short, even though it might have reached resistance. Okay, great. The market's been steamrolling higher. Look at S&P. I still want to be long, hasn't reached its objective. I know Russell's a two-way tape, so I'm not scared to take a short or a long in that market because no one has the upper hand. When you get into treasuries, same thought process. But when that trend takes place, if it starts to move in that direction, then I really want to emphasize being a scalper in that direction. And so it's a long way around of saying, look, don't change your strategies, but put that context of the bigger picture into the short term. And when you do, this is a really good market to be able to short-term day trade.
Yeah, no, that's a great explanation, Anthony. When we think of that transition from indices and treasuries, as a technician, to me, it's data, right? So there's no reason to change up your looking for setups and looking for trades. The charts are going to present the same way. There might be correlation, but it really doesn't matter. You're looking for the same ideas. Where are we in the range of the Bollinger Bands? Where are we in the range of that 30 to 70%? And, for viewers, you might have different setups, but the charts do the same thing. It's just data is the way I look at it.
No doubt. And they definitely have different characteristics about them. The way I execute NASDAQ's a wider range of execution than the S&P, than the Russell, just because it's, once again, price is less sensitive in NASDAQ. It's more sensitive in S&P, and it's even more sensitive in treasuries. Right. So if you're a really tactical technician and you really find that your entries are really good and your strategy is really solid on price entry, then the treasury market's a really good market to take a look at. And so what I look at a lot when I'm looking at treasuries, I go back to these order flow charts, in which next week we're going to talk a lot more about rollover in the indexes. But this week we actually can talk about rollover in the treasuries as they roll sooner than the markets do in the indexes. And so right now you're really caught in between this June and Sep. When you look at, I have ZNU up right now. As you can see, it hasn't even really moved one full tick. Right. Not even a full tick to this point. I was hoping to be able to see if there was be some volatility for some scalps, but there really isn't right now. I mean, not unless I could buy 4.5s and sell 5s and work the bid and work the offer. So there's really no point in doing that. But it goes back to the same techniques that I look at for the equities, I'll look at for what's going to happen in 10-year. And what's interesting is, so you can see this morning, you had that little bit of a move off of PPI where the markets moved higher. And, you were going to see a lot of people talking about how cuts are probably getting closer, even though the Fed yesterday only said, oh, now the dot plot's only 1. Who knows? Who knows, Tom? I don't know what to think about it. I mean, I can't think that much. I don't want to really crowd my head with things I have no idea what's going to happen. But nonetheless, I think that for now it's a two-way tape, and I want to look for squeezes lower and squeezes higher. And those are going to be areas where I look for rotations. If you look this morning on the data, it's pretty interesting, right? If you take the 10-year and you move this out a little bit, you can see down here, you had a really big seller. This is a big negative seller on the Delta bar. And this to me is an area, if it grinds back down there, you're going to try and see buyers. Look up in the high. Remember we talk about good high, good lows. Right. When you look at these in treasuries, you see it often, right? And you see when they go up, you'll see a bunch of liquidity come in at a high or a low. And if it turns on a dime, that's a really scalpable area. And it is when it comes back to it. So I look for these offsets in treasuries. And I look for a day like today where you see Delta. Let me see what period. I have 30-minute volumetric up right now. I have regular trading hours as well. I like to see a squeeze back down to here, watch the response. If I start to see 9.5s hold, to me, it's one of those things where it's like, if you come in down here, you come in, you work the bid, and if it starts to get filled and it goes 10 bid, 10 half bid, I'll trade size here and then just squeeze out for a half a tick or a tick, right? I mean, still it's a one full tick in a treasury, because they're in half ticks. If you were to go to like 30-year, it's going to be one full tick. But it's like $15 and change per tick. And so I will really lean on price. If I see sellers come in down here again and it gets absorbed, I'll work the bid, bang, 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 like that. You know what I mean? And then if it goes 9.5 bid, 10 bid, I'll work the offer to see if I get filled. And maybe I try to take even another tick out of it or two, depending on the situation. But I try to provide liquidity into this area myself. So when I see sellers come in, and if a price gets absorbed like this and it can't push through it, this is a market that is very scalpable for tick by tick. Now, I want to get to one other thing. When you look at the micro treasuries, so right now this is actually still June, but micro treasuries expire monthly, so you're going to go to July, so they have a different expiration. This is a product you can use to actually trade the actual yield, right? So it's 4.275 right now. If you think yields are going to 4 or they're going to 4.5, you can use this. I like this as a swing basis, and each one of these is $1 per tick. So I think it's a really good product from that perspective, because if I want to buy for a longer term hold, like if I think rates are going to go to 4% in the 10s, I can get short here. And then, it's $1 per tick. It's pretty just straightforward, right? And so you don't, it's pretty cut and dry.
And Anthony, those micros trading in yield, those are really easy to find on NinjaTrader, right? It's just 10Y.
Yeah, 10Y M4. Yeah, actually, I don't have it up on the chart. I use Tradeovate alongside Ninja, because I use that. But yeah, on Ninja, if we just pull it up, and these, so I would say when you look at, when you go to, you can see it right there, micro 10-year yield future, it'll pull it up for you.
Yeah.
When you look at this market on the right, you can scalp this market too. But here's what I would say to the traders on this one. It's $1 per tick, easy to overtrade it. You're not going to get that, I don't think you're going to get that same type of, I don't know what the word I want to use is. To me, this is not a scalpable market, because you have to trade too much to get, a scalp of decent risk versus reward, meaning that you're not going to get a big move in yields.
Yeah.
This is meant to trade, I think, a little bit out of a wider scale. This is to slow you down a little bit and trade the yield. Like trying to buy 4.74s and sell 4.79s. It's just not that easy versus the risk reward, because in the scheme of things, from 4.28 to 4.27 is not much. So the 10-year may not move, and you might find yourself in what we used to call the toilet bowl and just over chopping yourself into oblivion here. This is a market where you want to really look more at the yield, and you want to widen it up a little bit. So I think if you're a directional trader, this is a better market for you. Maybe not necessarily better than 10-year, but better suited in terms of your risk parameters, because this is only $1 tick versus 15, 63 or whatever it is in the 10s. But if you look at the 10s, but it goes back to it here. The reason why I like these markets as scalpable markets is that, number one, it forces you to be patient. So if you come in and just try scalp in this market, you'll get chewed up, because if you come in and you just try to buy 14 halves and sell 15s, you're going to realize really quickly that this is, not the market for you. You have to wait for the little squeezes, and that's when you get paid. So it drives you to really be patient. But when it gets to the levels that you're looking for responses at, you're going to know the response right away. And that's the key. So like if they were to blip down to 9s, I mean, I'll buy, several of them, and I'll look for a quick rotation. If it doesn't go 9 half bid, or if I'm working 9 halves and I'm waiting to get filled, and all of a sudden they're chewing through the 9 halves and I see 10s are going, I might buy 10s and then try to sell 10 halves or 11s. Right. And so I'll scalp this area with heavy sides, because I know the minute it goes like 8 offer, I'm done, or 8 half offer, I'm out, because price matters more. And so if you're someone who likes that style, that's why I say it's a good market to look at, because you're going to know if you're right or wrong right away. And if it were all of a sudden it would get you out and you goes back in, you could go back in and work the 9 bid, or again, work the 9 half. So you can be active in this type of market as long as you stay disciplined to your risk and your stops. But the responses are really strong. Price responses in treasuries and bonds SOFR. Those markets have, when you're looking at order flow tools or even technicals, they are going to show you an immediate response at a price level that I think is much more scalpable on a price per tick basis than you would see in any index. Because indexes are always going to have more slippage because you're going to have way more players out there, way more traders out there, and there's just price slippage around those areas. And in the scheme of things, if you're a scalper, this is a product I think that you should take consideration in.
So for those who are new to treasuries or might be thinking about exploring that, you're used to indices, and now you're thinking, well, treasuries, I want to branch out a little bit. One of the things that you have to be aware of, I think, as a new trader is we like to say, or I like to say, it's just data, but really it's more to it. I think you alluded to it, Anthony, which is these markets have unique features that you have to be aware of. And just today, just like I think Monday and Tuesday, treasuries, there are auctions, right? And so today we have a pretty big auction, I think. Could be pretty big. It's 1 o'clock, 30-year auction. Tuesday we had a 10-year auction, right? So we're used to seeing news like 8:30 we had PPI, CPI yesterday. Maybe you see a 9:45 or 10 o'clock report. You're pretty much done for the day. Sometimes there's an 11 o'clock report when you're trading stock indices. But treasuries have different schedules. So I think one of the things as a new trader to treasuries you got to look out for is be aware that there's market moving activities, events, reports, whatever you want to call them, auctions, 1 o'clock. It's a different schedule. You have to be aware of that.
I'm so glad you mentioned it, because if you go out into Twitterverse, Xverse, if you go into even my Discord, or you go anywhere where you see people constantly commenting on the markets, even equity traders are looking at auctions now, right?
Yep.
And it's just because we're in an interest rate environment where really no one knows what the Fed is going to do next. And so I think that always creates opportunity. Uncertainty in the world of finance, uncertainty in the world of trading is always really good market environments for futures traders. The reason is because you might get a price that you never thought you'd get. There's going to be volatility. There's going to be opportunity. Never that I'm never that certain about what's going to happen anyway.
Right.
But when it comes to policy, when you've got monetary policy that no one really is sure about, you've got fiscal policy I think a lot of people aren't certain about. When you look at it from the macro world, that means that interest rates are going to be moving, right? And you're going to look at yields, they're going to be moving, right? And that's going to have an impact on indexes. And so if you're an index trader, I just really think that watch the action in the 10-year or the 30-year or the SOFR when you see these auctions. Go to Sim, trade them on Sim, test your strategy there. I go back to where I started today, and I'm going to end it. You don't need to reinvent your strategy for it. The execution is going to be a little different when you go from trading a NASDAQ or an S&P to trading a 10-year or a 30-year or a micro treasury. The difference is in the execution, not in the actual strategy. And the difference is that when you're trading a 10-year, a price matters more. So versus NASDAQ, I scale in over a range. 10-year, I don't. 10 years, all in, all out. I'm almost never, there's always that almost, but 99.9% of the time, I'm not scaling 10-year.
Right.
If I want to buy 9 or 9.5, I buy them all there. And if I get out of them all at once, that's an all in, all out market for me, because that price either holds or it doesn't. I might buy a little in front of it or a little behind it. And when I say scale, it might be half tick above or below, but I'm in or out at those prices. And so psychologically, that's what changes for me, not the strategy itself.
That's great to know. I think that's what the number one takeaway here is. Anthony, what else? Anything else you want to talk about before we wrap up?
Well, I know that Bitcoin continues to be on the move. I see a lot of people talking about it all the time. And Ethereum, they're constantly moving. I think I just want to make sure everyone is aware of micro cryptocurrency futures and options for these products. CME Group offers. You can learn more at cmegroup.com. As the world of crypto continues to become something of conversation in the entire marketplace, it's great to know that futures markets have the ability to trade the big contracts or the micros or even options. So make sure you learn more about those at cmegroup.com.
MBT, MET. We tend to show MBT on our show, Anthony. So our viewers are aware of Bitcoin, but just so you know, those are the symbols for the micros in Ethereum and Bitcoin. Anthony, thanks so much for coming on and telling people how you trade treasuries. That's great. And we'll see you next time.
See you next time, everybody.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.